Hello, this is Mike, and I just wanted to explain to those of you who are interested in Forex or don't know what it is. This is the basic gist of that whole situation. What it encompasses is basically you buy and sell foreign currencies. Every time you go to another country or deal with another country, the currency values are different. This is how much the price changes. Right now we're looking at a chart that is Euro USD, which means you can see at the top it says Euro USD Pro Weekly. This is a weekly chart. Each bar candlestick represents 1 week worth of currency. What you have is they change prices. Right now it's the euro versus the dollar, the chart. I have a bunch of other charts that I'm trading with and so forth. And these are indicators that tell me when to buy and sell and stuff like that. Basically, in a nutshell, what you're trying to do is right now the current price is $1.34.14.8. Okay, the numbers to the right of the decimal point represent, you know, what we're trading as pips, percentage in point. And the fourth place to the right is equivalent to a pip. Every pip is worth a lot of money. I mean, depending on how it works is you secure lots of money. This is the spread. That's what the dealer will make. When I buy or sell a lot of $10,000 is a mini lot. When I buy or sell that, I use money to secure it. And then basically I'm in a good trade right now. I'm going to probably make a lot of money because I've broke through this uptrend line. This is a trend line, and you draw these on there to see where to buy and sell. There's a lot of when price goes up and hits a point, that's resistance. If it comes down and hits a heavy buy point, then that's support. You go from the support to resistances, and you try to sell when you hit resistance and buy back at a cheaper price. So you make money if you sell when the price is dropping, and when it gets down low, you buy it back cheaper. So you get the difference between the price values. So up here, for instance, the price was approximately $1.32 per euro. This is the price we pay for euros. So now if I sold at $1.32, got a $10,000 lot, that corresponds to a lot of money by the time I buy back at $1.34. Alright, it's $1.37 up here. If I sold here and bought it back for $1.34 and times $10,000, this is per dollar or per euro, but times 10,000 euros, that makes a lot of money. I mean, let's say I had $10,000 here worth of euro, 10,000 at $1.33 times, you know, whatever that comes out to. I sold that much, $1.38, I'm sorry, and then bought back for $1.34, so that's 4 cents. Okay, times $10,000 times 5. So I've got 5 mini lots. Well, I've got way more than that. I've got, let me look at the chart. I've actually got 3 trades going on Euro US dollar. There's 3 lines. These green dashed lines are my sells. I've sold at all them points. So I've got 3 trades right now. As you can see, I've sold at all 3 of them. I'm still losing money on these bottom 2. But on the top one, I'm making money. I sold again there. So what I have here is I have 1 lot making $500, and I have 2 lots that are losing about $500. But as soon as it breaks through these lines, I'll be making money on those 2 as well. So altogether, I'm looking for a pretty good drop. It may be a week, it may be a day, but when it drops down below these, I'm going to be making some pretty serious cash. A couple $1,000s. I don't know. Anyway, right now would be a very good time to sell euro because, like I say, we broke through a trend line right here. So it means that now our dollar is going to increase. For less money, we'll be able to buy the euros. I've sold, and so I want to buy back at a lower price and make the difference. So if you want to sell some euro right now, there's a good chance to make money. Or, you know, it's hitting some support here. It's going to hit this line. Once you break through a resistance area, coming back down, it's actually comes into support, and it'll try to bounce away from that. But I have a pretty good feeling that it's gonna keep dropping down because it broke through this trend line. Once again, it's gonna be hard to get back through that trend line, so it's gonna want to drop down. I'm thinking it's gonna come down in here somewhere. So if it gets down to there, I'll probably sell. It doesn't matter. I could put stop losses in. I could trail it down and, you know, say 50 or 100 pips, and if it turns around and heads back up, I can get out of the trades. So I can do that automatic. I could just say, well, let me do that now. I'll pull down from where I sold, and I'll put a stop in there. If it gets down to here, I'll have it cash my my trades out automatically. See, if I do this, it says order. I've put in an order to modify this and put in a stop loss. I mean, if it turns around, then I'll get out of the trade. But I'll let you know how this pans out here in a couple days. I'll bet. Right now I'm up on money, so if I close out all my trades, you can see here I've got 10,464 as a balance. I started with 10,000. If I cashed out right now, even at a loss on a couple trades, I'm still ahead $200 because it's a demo account. And my equity at this time is if I cashed out right at this minute. So I'm not going to lose any money right now, but as soon as this drops low, and the margin is how much I've actually spent on to secure this. I've secured it with $2,770, all these trades. I'm making money on interest. The swap is the interest difference. And each one of these I'm making money on interest regardless of if I stay in them for a long time, these are going to keep going up if I stay in the trades. I'm making money on this trade. I'm losing it on those two. Roughly I'm losing it on three. I've got a New Zealand dollar trade up here too that's at a loss. So altogether my trades, I'm down $265. But since I was up over 10,000, I'm still going to be making money on equity. So